Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's July the 8th. This will be our chart lesson for today. And real quickly, obviously there was no chart lesson yesterday. I actually set up um, a note to go out at about the same time the mid morning report would go out stating that there wouldn't be a chart lesson because I ended up taking a extended day for the holiday. We went out of town for the 4th, and we traveled back on Monday, and just wasn't any way I could get back at a decent hour. So I just took that day off, and I thought I'd notified everybody, but I apologize that I didn't. So if you wondered where I wasn't sick. I wasn't didn't have anything to do with health issues or anything like that. I just took an extra day for the 4th vacation. Went to see some of our kids. So don't get to go visit them often, and we wanted a chance to do that, and it just was going to be a little bit too short of a trip for where we were going to have to come back on Sunday, so I took that extra day. So I appreciate you bearing with me. Apologize that for those of you that worried that maybe I had another health issue. No, I do go see my heart doctor next week, and on Tuesday, I believe it is. I think it's a week from today. So I won't be, I'll take that day off because I have to go to Memphis, which is about an hour away from me, and it's in mid morning, and I may get back in time to do a chart lesson, but I'll probably just take that day off. So probably be off next Tuesday as well then. So, but I'll keep you posted between now and then. But let's get to the chart lesson. I know that's what you're here for, not to hear about what I'm doing or where I'm at. But I did want to make everybody aware because I did get some emails and stuff, people concerned about my health again. But no health issues. I'm still treading water where I was before, just waiting to get in to see my heart doctor, and that's next Tuesday. So hopefully I'll know more then. And otherwise, I feel good, feel fine. I did purchase me it's like a 12 lead EKG monitor that I can take my own EKG, and I've been monitoring that. And for the most part, I'm getting normal readings. Occasionally, I do still get an AFib reading, so still not sure what's causing that, but hopefully we'll know before. Maybe I'll know next week, maybe I won't, but hopefully we'll be on the right track next week, and we can go from there. So anyway, here's our daily chart for today. You can see kind of an inside day. Really, it's just a range day. This is probably just some consolidation. We did make an all-time contract high here. I think this was on the 3rd. Yeah, this would be on the 3rd, which was that Wednesday, I believe. Or no, it'd be Thursday that we were only open half a day. So it looks like we did get some movement on that day. It's usually not worth trading those days, and I haven't really looked at the chart to see what that day looked like. When we flip over there, we can scroll to the left a little bit and take a look at it real quickly and just see what it did look like. But generally, those days are not worth trading. But this market's been on a tear. This is the first real correct couple of days of correction we've had in in more than a week of trading. And while this does look like kind of a neutral day, we did still close down, even though we closed up from where we opened originally. We still closed down today. Um, we closed today at 62.71 and 75. And here we closed at 62.76. So about 5 points. Not much. Not enough to make uh, too much of a fuss over, but it is a down day. And we did, it does look like we closed just above the resistance, so maybe it's going to act as support and we're going to go higher. We'll just have to see. We did relieve some of the overbought condition. We're still in the overbought territory, but we relieved it enough we could go higher now. So it wouldn't surprise me if we don't correct some more, even if we're going higher. Wouldn't surprise me if we don't correct a little more first, but we'll see where that takes us. But anyway, let's flip over to the 2,000 tick chart, see what today looks like on that chart, which it's just going to look very similar to what you see here, just kind of a mixed trading day, range day. So, but let's flip over there and we'll go through the trades, and we'll take a quick look at that, uh, um, the 3rd where we made that new high, just for just for the fun of it. So let's flip over there. Okay, here's today's chart, and you can see we're just working sideways. And we closed slightly lower middle of the range. But let's flip over to the third. Here's yesterday that I missed. It looks like we had a pretty good some movement yesterday and maybe some chance to trade. But here's that July 3rd. That's quite a nice rally, especially for a one that closes at noon. So that's a really nice move. And looks like maybe there's a second entry right there. There's one there, but that looks a little sideways. That one might have worked. I don't know if it would have been outside the trend line, but there's a couple of entries here. Here's one. That would have been a second entry. I mean, you could have made some money on that day, but that doesn't. Generally, you will not see a trend like that on a holiday that closes at noon. Maybe since it was going to be Thursday and Friday, there was some buying that came in that day before the holiday really started. But and you see it did take most all of it back. I don't know if there was any news that would have rallied that up and then taken it back. Maybe. But it took it all back on the 4th. Every bit of it, basically. We might have closed slightly higher on the 4th. And then yesterday we took some more back plus some. And today we just treaded water. So there it is. Just, it's worth looking at for the fun of it. But anyway, here's today. You can see the midline, and we just kind of worked both sides of that midline. And there's quite a few trades. I mean, they're mostly all range rules. I think there's a couple of triple tests and some chance to maybe there might be a second entry or two off the trends in there, but I can't remember. We'll see. But let's zoom in here and we'll go through the trades. 7 o'clock came. I think it came. Was it this bar on this second? I think this was just prior to 7 o'clock. That's the reason I didn't mark it. But if you were trading already, you could have taken that nice second entry there. It was a little bit before 7, but 7 didn't come till on this next bar. But you did get a lower high here, and so I'll mark that one off these highs. It is a nice lower high. I think you could trade that. And then we just got another double top there, and that confirmed that trend line. So I like that one too. I think you could take that one as well. And you actually had a second entry here on this inside bar, but no setup really. And then prices dropped on down. There was a triple test here. I did not mark this. There's not a whole lot of room back to that trend line, and we have had no break of it yet. I mean, there's probably enough to get out, even if you don't go higher, which you do. But this looks a little congested to me. I think you have to sit tight on that. I mean, if you draw this properly, you can see there's clearly a range there. And so that's really dangerous going long right into those highs. So I think you have to sit that one out. Turns out to be a nice move up. And there is another second entry here. But I think you have to wait to make sure you're on a lower high to make sure you don't get another leg up, and then you do. And I marked this one red. Normally I wouldn't mark this this red, but because you also have a triple test, I think you're safe taking that trade, and for that reason I like it. Turns out to be a good move. This is a lower high, but I think you've already moved too far. I think you need to wait and see if you get something better, and then a few bars later you get a second entry. Now this is an inside bar, but it makes a 2-bar matching high there. And with it being kind of confirming that trend line, I think you can go short there. I marked it green. It's not a perfect setup, but it is a second entry. It is a continuation pattern of a failure, possibly. You could call that a failure. It's not perfect. It's not ideal, but there's reasons to consider that trade. And it turns out to be a pretty nice move. So you're expecting prices to retest the lows here at a minimum. And we may even retest the lows of the range, which we don't quite get there, but we do go much lower. So These are all first entries, and then you get a first entry, second entry. I didn't really like that signal bar. You do have a break, and it does look like a couple of legs up. I don't think that closes in the lower 1/3, so I think you have to skip that one. And then this one, you could only trade that on the engulfing bar, and that is mostly green, and it breaks higher first. So I think you're fine. And if you are good enough and experienced enough to trade engulfing bars, 95% of you will not be. So you should leave these alone, or you'll end up having a bunch of losses. When you're experienced enough and you're profitable for a while, then you could start possibly trying to learn to trade these, and so that might apply to a handful of you. But so I do mark them and note them, but most of you should just ignore them. I don't think you want to take this one. This one is tempting, but we're at the end of a. You can't really take a reversal failure there. That's not a reversal. That's actually a continuation failure, but it's outside the trend line, so best is leave that alone. And we bounce down here, no setup to go long, and look at that thing go. It just takes off like a rocket. You do get a first entry, second entry, and then you get a close outside, and you try to go higher twice and make that double top. I like going short there, just to try to ride it back to the EMA at a minimum, and it may go all the way back to the other side again, which it does take off. That turns out to be a really nice move there. Then you get a first entry, second entry. Now you got actually 3-bar matching highs, so you could use any one of those for the signal bar. This one's plenty bearish enough. You would have to wait for this to close. Technically, it's not an engulfing bar anyway, but you could go short one tick below that one, and then you make a lower high here. This is still qualifies, and you could enter. It's a really big bar. I think you're better off to skip it, but I did mark it green because it does qualify, and you may not could have got in it anyway because it skips over right there. But maybe if you use the limit order, it comes back. I don't really remember how that played out exactly there, so I'd probably skip that trade. I didn't really like it in real time. And then we bounce down here again, and now you got a 1, 2, 3 triple test, and it's also a new swing higher, so a first entry, second entry, and I think you can count that as a leg down. So I like that trade. I did give it a green because I think you're better off to wait on the higher low, and that comes here, and you don't get a setup on it, and it's probably a good thing because it fails and it runs down, and you make another new low on a breakout failure, and so it closes back inside. I like that one. Again, I only give it a green. I think you need a higher low to be certain, because you don't. The same thing could happen to you here as happened on these other two. Now, if you took this one, it works. This one you just can't take it. The signal bar is no good. And if you took this one, it not only works, it's a great move. So that's why I mark these green, because they're not perfect setups, but there's still reasons to like them. And sometimes they're really great moves. Sometimes you're going to lose on them. So that's why I mark them green. They're not perfect. They meet our criteria, but just at the minimums. And there's usually some little something that you may not like about it. And here it's because you need a higher low. Same thing here. But it does take off. We get a close outside, new high. Same thing here. You're better off with a new low, but you might take that, and it turns out to be another good move. Runs down, close outside, new low. Now you've tested this lower line multiple times, and you're really making a higher low here. And this, so I like this one. You do have the close outside, the new low as well. So I like that one. If you got a higher low, you could take it too, but you don't. This is too high, moved too far to be a higher low, tradable one. And this runs up, close outside, new high, but no setup up here. You move down. That's just a first entry. There's a second entry here, but it's not a good signal bar. It's inside bar. And this runs up. And we do get a breakout up here. This thing may be a little flatter here. I may not have drawn this exactly right. I think it moved some. I think it's more like this. I think that's more accurately drawn there. You get a closeout side and you make a lower high, but you don't make a new high, but it's a failed breakout. Um, and I don't think you want to take this one because there's no breakout side of the trend line yet, but until here, and then you make the lower high. So even then, it's still a little iffy, but it closes back inside the range. So I think you can take that one, and that's why I marked it green. If you'd got a good reversal setup here, I think that would have been the better setup. But you just don't get one. You actually do get. Notice the new low, first entry, and then there's a second entry, but that signal bar doesn't qualify. So runs down. There's a closeout side right there, but I don't know if that's convincing. So I would expect prices that are still going to try to retest this low. They may not be successful, but they're probably going to try it. So when you get the first entry and then the second entry here, I like going short there. It takes it a minute to really move on, and you probably wouldn't have got a runner there, but it's still a nice, easy scalp. And then it does take on off. There's actually two legs back, but the signal bar is no good, and you don't want to trade that on an engulfing bar, and the next one's an inside bar. So still no chance to enter. And then you're not quite to the lows. Maybe you've put in a bottom here. I think you need a higher low. I wouldn't even mark. If this was off the lows, I'd mark this green. But kind of being there in no man's land, I'm not crazy about marking that one. So I think you're better off to skip it. And you don't get a higher low, and it runs up. You get a close outside, first entry. Notice this one coming down, close outside, new low, and you get a second entry long, and you're still expecting a retest of this high. So I like going long there. This looks a little congested. It's a little close to the EMA, so I did mark it green. Maybe you get a higher low here, but you don't. And of course, it runs up, makes a new high, makes another push up, makes a double top with a very bearish bar, and that is a first entry, second entry. I like going short on that one. It takes it a minute to take off, and then it breaks higher and turns down. You could still go short there. I marked this one green because it's a little bigger bar. It's kind of right into the EMA, but prices, you at least got a triple test there, and that's why I like that one. And so it's probably going to be a good entry, but it's just a bigger bar, and where it closes is a little questionable. So I did mark it green. And now you get a break. That's just a first entry. Now you made another new low. So again, that's just a first entry. And then it looks a little sketchy there, a little sideways congestion. And you got some support across there. So it drops down, but no setup. And then you actually get another bar here. It's just a first entry though. And you've only got a double bottom. And you might say, hey, there's three tests there, but this one, so you can't really, this one's lower than this one, so you can't really necessarily call it a high or low. So you might argue there's a triple test there, but there's still a lot of stem up here, and it's, it's just, you're having to go long right into the high. And even if you call the previous range up here, the high, you barely got enough room. Technically, this should be a little lower, and you don't quite have enough room there. As you can see, I think you only have it's pushing. In other words, it's pushing it. So I didn't mark it. I think you're better off to skip it. And it doesn't really go anywhere. Now you finally get a triple test, but I think it's a little too late here. It's too far after 230. But you can see what happens once you get a good test. It goes back to the highs. Same thing here. You close back in the range, it goes back to the lows. So it was pretty obvious. Now you could trade it, but right here, I just think it was a little bit early. It was hard to know what the prices were going to do there. So by the time you get over to here and the rest of these, it's pretty obvious what's going on. And that's the thing. Anytime you don't 100% know what prices are about to do, And sometimes it's hard to know because right in here you're at a what I'd call an inflection point. Prices could go either way. Um, so they could hold right here and go higher. They could be in a start a range here. They could just break higher and turn back down and keep going lower. It's just really hard to know at this point. But now once you've tested the lower, once you got 3 tests here and 3 tests up here, then it's much more obvious. Hey, we're probably in a range now, and so it's easier to know what's going to happen. So anytime you're not 100% sure what's going to happen, the best bet is just to sit tight. And that might even be obvious what's going to happen to a more skilled trader, but less obvious to you based on your skill set. So there's still the right move, even though one guy might say that's a good trade, it might not be a good trade for you. So make sure you understand that. Anytime you're not 100% sure what prices are doing, you never take a trade, because if you do, you're just gambling. And gamblers don't last in this business. We're in this business to make money and to make a living. And the only way to do that is to take trades when you're pretty confident you understand what prices are doing. Now, you may still be wrong on what they do at that moment, but you should have a good idea where they're headed. And when they turn down up here, we have a good idea where they're headed, back down to the other side of the range. And when they find support down here, we have a good idea what they're doing. They're going to try to go back to the upper side of the range. Well, here you got 2 legs up and we didn't get there. We didn't even get 2 full legs. So what does that mean? Prices are probably going to go lower. And then they go head lower. And so we were expecting prices to come back down to here, but you got a break and 2 legs down. So this move could be over to the downside. Now, are we going to go up? Are we going to go sideways? Or we find another reason to go lower? You got to wait and give it time to figure that out. And if you don't know and have a good idea, then you need to be sitting tight and doing nothing. So I hope that makes sense to most of you. If you haven't heard me say that before, make sure you listen, back this up and listen to it a few times till it makes sense. But on range days, what do we expect to happen? We expect prices to turn up off the lows and down off the highs. And that's pretty much what happened all day. But notice a few times they came up short. Sometimes, and then one time they overshoot. So you got to, here they all came up short every time for a while. So are we going to go all the way to the high, or are we going to keep making lower highs and continue to try to work lower, and we just kind of work sideways really? So yeah, if you don't have a real confidence in where you think prices are going and what they're doing next, then the answer is always no trade. And then once you kind of get it figured out, once you figure out where the trend is and you get a setup, go with the trend until you get the break and the new high, or you get to the other side of the range, and then start looking for a short. And then when you come back down here and the trend plays out and you're towards the lows, start looking for a possible long. So that's how you do that. And sometimes it's real clear and sometimes it's not. But if it's not clear, just sit tight. Be patient. Don't manufacture trades on your own. Make sure they're there and that your read is accurate on them. And you're going to just save yourself a lot of heartache and a lot of money, and you're going to have a better win rate. Simple as that. So as easy as that sounds, it's hard to do in real time, especially when you're new. A new trader's looking, every one of these swings and pullbacks, they're looking for an entry. Me, if we're in this trend here, I'm not looking for an entry till I see a second entry or we get up here. And if I get a second entry to go towards that and this trend's still in play, then I'm going to probably take it. If not, I'm going to sit tight. And then when we get up here, I'm going to look for a reversal and an entry. And then coming down, I'm going to look for a second entry on this trend, or I'm going to wait for a break in a second entry or a triple test or something. And once we get that new low, now I'm looking for a reversal. I don't get one till here, and even then it's not a perfect one. But we run up, make a new high here, and this plays out. So now I'm looking for a second entry or a triple test or a lower high or something to go back the other way. And if you don't get what you're looking for, where you're expecting it to happen, then you just sit tight. So I hope that's helpful. But anyway, I'm going to wrap it up. Hope you had a good trading day. Um, Hope you had some good trades while I was gone. Hopefully you took those days off. But I will say that July 3rd was a nice moving. Had some nice movement that day. But you got to be careful trading those days. You really do. And 99% of the time, you'd be better off to take it off and enjoy the time off. I know when you're new at this, you're eager to try to trade as much as you can and watch that market, and because you got that bug. But it's good to get a break from it. Oh, now I can't wait for holidays because I like those short weeks and I like getting those breaks. And with time, you'll get there. But try to fight that bug, that itch to trade as much as you can. Only take trades when you know what prices are doing and following the rules. Wait till after 7 a.m. and stop after 2:30 p.m. Now, if you're managing a trade into 2:30, that's fine. I mean, if you've got a good winter and it's because sometimes prices do move a good bit in one direction or the other after 2:30, but you just don't want to take any new trades after that because. But if you're already in the money and you're managing a runner, a trade you've already entered, that's okay. Just make sure you lock in your profits as it moves. That way you don't give it back or get burned if it suddenly turns and runs in the other direction. So anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and I'll see you tomorrow.